Welcome to my channel. Name is George here with Credit Recovery. If you're new to my channel, welcome. What we're gonna go ahead and be talking about today is we're gonna go ahead and be doing some credit. We're gonna go ahead and do some reaction videos, some credit advice here on the internet as usual. I'm going to go over a couple credit news of what came out within the last couple of weeks, and then I'm gonna go ahead and educate you guys on habits that people that have a 800 credit score. What they do, what does their credit look like, which is something you don't really see out there. Normally, people just tell you to follow the Experian guidelines of 35% payment history, the credit utilization, mixed credit, and all that. But we're going to go into a little bit more of a deep dive. So let's go ahead and start off with this first video here. Let's see. All right, this one right here. This one definitely looks good.
When you got bread in your pocket, you get all the great.
Ooh. Sorry. Commercials. All right. All right, let's just get into this and back to more commercials. Fun. Come on. Oh my god. All right. There we go. All right, so this guy, he does financial audits. So name is Caleb Hammer. Like what he does to help people get out of debt and just make them and educate them financially. So he's going to be reviewing her finances and letting her know. So let's get right into it.
So what do you do for a living currently?
Home insurance from home.
Okay, what's your job?
Oh, call center representative.
Nice. How much do you make?
15 an hour.
Okay, how many hours a week do you work?
40 hours.
Okay, so making 15 bucks an hour, you're working full-time, 40 hours. Just so I don't have to do the math, do you know how much you make on a monthly basis?
2,400 a month.
Okay, cool. Is that after taxes or before?
After taxes.
It's kind of hard to live on Austin and with $2,400 a month, isn't it?
Yes, that's why I'm
Yes,
doing
it
little
is.
side stuff, makeup on the side.
Okay, so lots of side hustles.
Side hustles, yeah.
If you had to guess, how much do your side hustles bring in a month?
Ooh, not that much, maybe 200, like an extra 200 a month or so. It's just here and there.
Okay, so you make $2,400 a month, plus an extra $200 when it comes to your side hustles. Looking at your checking account, I did see in the previous 30 days, you deposited a total of $2,843. Does that sound correct to you?
That sounds kind of high.
Yeah, it's definitely higher than the $2,600 then that
Yeah.
you potentially but I do think,
Shocked by that number.
how much do you think you spent though in that 30 days?
Mostly all of it. All of it, probably. Bills and stuff I have to pay for now.
So you spent $2,055.83.
Pretty close to all of it.
Pretty close to all of it, but you actually have $792 sitting in there at the time of this statement. But let's look into your checking account and see what you're spending money on.
Oh, okay. It's gonna get deep.
How much do you think you spent in total when it came to eating out?
Eating out. Oh,
And this is from using your debit card. I see you actually pulled money out of ATM, so I can't calculate that, but using your debit card.
I don't usually go out a whole lot, so I don't think I'm spending all of it on. I think mostly it's going towards bills, but I don't think I'm going.
How much?
All right, let's get a little head on this. Again, I'm going to go ahead and educate you guys here on some information.
Applebee's, Uber Trip, Smoothie King.
Nope.
And then $246 for the car payment every week.
She said
Every week?
246.
Yeah, but
Whoa.
it's gonna change to 110 because I have a deferred payment.
She said 246 a week. Are you kidding me? How much is that? Oh my god, $246 a week? I'm gonna times 4. She's paying almost $984 a month for a car. I see why she's struggling financially. Dang, that's really high for a car payment. But let's listen to some more. Let's see if we can get some more information.
because I only put down 1,400. I don't know.
Wait, how long?
For another like 3 weeks, I'm paying 246 a week.
Oh, I see what you did. Okay, so we can quickly transition to your car debt then. Your primary loan of the car, essentially $15,000. And then you financed your down payment? Oh.
Oh, is that a lot? That's a lot of money.
No, it's just stupid. Why don't you just actually save up some money and put money down instead of financing a down payment?
Oh, put more money down?
Why didn't you just put money down in general?
I put 1,400 down. I could have put 2,000. I was supposed to put 2,000, but they deferred the payment of 600.
That makes no sense.
So I had to pay that extra to pay that off, that 600. Then it's gonna be 110 a week.
Why are you doing it by week?
That's how they do it.
You know they do
That's
it.
actually better for me because then I don't know. Then it's gonna be harder for me to budget. I feel like.
You do weekly budgets instead of monthly?
I just feel like it would just be easier for me. I don't know, because I would have to save. I would have to save more. I would have to save, like.
You know they're showing you that 110 a week because 110 is an easy number to swallow.
Exactly. Pause.
Right? $440 a month. How does that sound?
That's a lot.
Yeah.
I needed a car.
For $15,000 car.
Yeah, my dad was telling me I should return it, but I was like,
You should listen to your dad, because where car prices are right now, it's probably not actually in the real world like a year.
So she's paying $440 a month instead of the 9 that I was talking about. So that was including her down payment, which eventually is going to go away. So yeah, she's in a cut. She's kind of in a tough spot right now. But essentially, yes, $440 and you only make $2,800 is what you take home. That's not a lot because then you have to factor in insurance. If it's a brand new car, you already know insurance is really expensive. So this is what I talk about when dealerships take advantage of people. Like they put her in a $440 payment. Well, it's not all their fault. Like also there's part of her that she should have known that 440 is not really a that's really high because she still has to pay rent. She has to pay all her other expenses that are reporting on her credit. So it's like, well, why would you want to do this? At 2,800, I would definitely have stuck to like 10% of my income going towards that. So that would have been like if it's 2,800, that would have been like $280 for her to do. So right now, let's just see so far. Where is her debt to income? So she's making so far 440 and divide that by 2,800. So far her debt to income is at 15%. So if you're new and you don't understand what debt to income is, it's pretty much your debts divided by your income equals out a percentage. So what I did for her was I did 440 divided by 2,800, and it went ahead and gave me 0.15 and then a whole bunch of numbers. So if you just anything, the two numbers after the decimal is really what equals out the percentage. So yeah, so in this case, she's at 15% debt to income, and that's not including her housing. So I can already tell that most likely she's probably over 30% at least in debt to income. But let's go ahead and continue finding out. Let's jump into this credit report. I'm already seeing that.
With the Smith's Rewards Card, it's easy to get low.
Oh my god, that's wild. All right, shoot, credit report.
it's gonna be
Let's
things on my credit now.
pull your credit score. Let's take a look at it.
No, it's gonna.
It's probably like in the
Let's take a look at it.
650s,
Okay.
I believe.
Oh. Wait a minute.
Ooh, sorry.
Never seen a credit score in the 400s before.
He said 400. Oh my God, that's God. I don't know why she's laughing. Why does she think this is funny? It's not funny to be at a 400. To me, it's funny because I'm like, how do you let it go that bad? I understand being in the 600s, but in the 400s, that is just wild. Wow. She needs my service. If you know who she is, please send her my way so I can help her. Wow. 400. If that's the first time you've ever heard of a credit score that low, go ahead and go ahead and um comment below. I would definitely like to know if there's more people that that have been in a 400 credit score. So wow, let's get back into it.
I mean, I knew the number existed because there's obviously numbers that exist before 500.
It's really bad.
It's actually down.
But the apartments are on there.
What about what happened to the apartments?
Feel like they go to
Ditched
the
the
election.
lease.
You just got out and ran?
Basically.
And didn't pay?
Because my husband was handling everything, or my ex-husband was handling everything, and then he's like, "Oh, I can get that off your credit," and
One, I feel like your car loan is like a payday loan. Like, the interest has to be pure insanity. I can't see what the interest is. They probably don't want to tell you what it is on here. And it's because 400 credit score, 450, you have $4,630 in collections. Did you know that?
Wow.
Yeah. I didn't know it was that number, but I knew it was a lot of stuff on there.
Your Ubering of $100 a month is much more affordable than your.
Wow. So now we understand why, well, so far, why she has a 400 credit score. She let an apartment go off to collections. Oh, wow. That is rough. That is rough. And it's not a small amount. And it's going to stay on there for 7 years. So if you ever had that happen, you know that that will take 7 years if it's accurate. If it wasn't accurate, then obviously it can be go ahead and be removed. But if it's something that you did happen, like in that situation, say if you just abandoned the lease, yeah, it's gonna be on your credit for like 7 years, and it's gonna be really hard for lenders to go ahead and approve you. That is so much. Let's get back into this video.
After your insane weekly down payment financing thing ends, it'll still be $440 a month for a nothing car. Why?
That's the only place that would accept me.
Yeah, what was it? What was the place?
It's called Dynamic Motors.
Why is collections not paid off? Why'd you get a car when you have collections? Why is collections?
Maybe to everyone that may be asking, how does she even get approved? So I do have some experience underwriting loans that are done through dealerships. Those type of underwriters are called indirect loan underwriters because they can't talk to the consumers or the people. They can only talk to the dealership and provide them all the information. So essentially, there are lenders out there like there's one that's called Westlake Financial. You have one that's called the Revo. And then you have one credit acceptance. So those are people that do loans for people that have subprime credit, so pretty much a 670 and below. So yeah, so if you're in that situation, like if you're gonna get a car, since you'll have such a high interest rate, you have to then mitigate the risk by having a low uh loan balance. So what I mean is don't go for a $20,000 car for a 20% interest if you're in that bad position. What you do is first you get contact with me, I'll help you. Next, after you send that to me, then what you would do is I would just finance like $5,000 car or maybe $7,000 car, something that's really low so your payment won't be so high and you're paying so much interest. Yes, you can always refinance down the road, but with in her situation with $5,000 credit, unless she clears that up and pays it, no bank or credit union is gonna definitely not gonna touch her because working at a bank we had like a tolerance of if someone had like $1,000 in collections, we can't give them the loan. The loan can get turned down, or the system will automatically turn it down because of the low credit score. It doesn't meet the minimum bank standard. So it's like, yeah. So it's like it's not like she can refinance in 6 or even 12 months. What is going to need to happen is she's gonna need to pay off the collections and then at least make the payments for 1 year for that to build trust, and then that increases, it doesn't guarantee her, but it increases her chances of being approved or maybe just refinancing it with another lender that works with people that have bad credit and bankruptcies. So yeah, wow, she's in a rough spot. Let's get back into it.
It's not paid off. Why is there collections? What is the collections for?
Apartments.
Why is this not paid off? Why have you not paid this off?
I guess I can. Would it go up if I start paying it off?
Wait, would what go up? Your credit score?
Yeah, like would it start going up if I start paying it off?
I mean, once the collections are off, yes. You need to call them and negotiate this down, and you're gonna have to fight with them. How long have those collections been there? Because it doesn't say that.
Probably 2 years.
Oh, they've been there for 2 years? Why have you not paid this off? Please tell me a
I
reason.
didn't really look into it. 'Cause
If you pay it off in full,
Wild.
your score will increase by 25 points.
that's it.
Yeah, dude, you had collections on your account. That
too much.
means you're a terrible person to lend to. Means you're risky. So it's still gonna be there. And if you settled it for less, it'll increase it by 21 points. Because you clearly cannot afford this, because your car payment makes up half of your income, and then with the $300 you give your mom, and I don't even know what your other payments are, it's brutally clear you cannot afford.
So we heard that they added another 300. So we have 440 for the car plus 300. So far she's at 740. Let's see what else we
This
find.
for a Bella Flats Apartments.
Yeah. See, there goes the apartments on there.
You need to call them and fight to get these reduced. You need to save up $2,000 as quick as you can. As quick as you can. I am not joking. You need to save it up as quick as you can. Say, I have $2,000. I will settle it today. And keep saying that over and over again until they agree to it. And give them $2,000. Boom. The $4,500 in collections is gone. You need to do that.
That's only for one apartment?
Well, the other one's only 421, so I'm just combining it together. When they're both gone, your score will increase by 50 in total.
And then I won't be in collections anymore.
And you will not be in
Oh wow. My bad, guys. I think oh my god. Oops. Well, yeah. Wow, that's rough.
You know, they can take you to court, right?
Yeah.
Yep.
How are you not
An issue.
sweating right now?
I'm holding it in.
I would be dying.
Should I call the collection agency? Call them?
Yes. Well,
Let's
when
see
you
what
have
else
like 2,000
we can
saved, though, do you have
fraud.
2,000? No, you have 7 student debt.
I think I owe like 400 to a school.
Oh, well, there's more. It just keeps coming. 400 isn't. Why is that not paid off? Can you tell me why that $400 is not paid off? If you have $792 right here and you know you owe $400 to someone, why is that not paid right now?
I owe $400 to school.
You said you owe $400 to a school.
School, yeah.
Why is that not paid off if you have the money? More than double. Or you double.
I'll look into it now.
What other debts do you have? Credit cards? Anything?
No, no credit card.
What other monthly bills do you have to take care of?
Nothing. All the rest goes to like what I want or need. Or...
There is no more wants. You have no more wants. You have no more wants. Okay. Today, you need to figure out that school payment. You need to pay that today with the money that's in your account. You then need to call the car company. You need to say, make up all the excuses in the world and try to return this car. And if you can't, go to CarMax, try to sell it. You need to get rid of this car because that's insane. $1,000 a month and then eventually $500 a month. That's insane. $15 an hour.
Then I'm gonna be stuck with no car.
No,
I can't get to work.
not necessarily. One, the amount of Ubering you did that month, cheaper. Two, you said it was remote.
Yeah, I have the remote position, but if I want to get a second job, then
Try to return this car or sell this car. When you sell it, pay off this balance immediately. Because used car, it's a seller's market right now. I think you could get close to this $15,000. I really do. Unless they really jibbed you, because it sounded like you went to like a sketchy place. You have to look into that on yourself. Wow. And then you do need a car.
yeah, I need a. That's the only place I wouldn't go.
No. Wait a second. You need to cut back on all of your wants. Every want. You do not have a want for 3 months. You work your remote job. You have no payments in the world other than $300 a month when you don't have this car. You save up $5,000 as quickly as you can. You go to a place, you get a $5,000 used car. Piece of crap? Yes. But that's literally all you can afford. And you could save that up in a few months with your no payments. So that's step number 2. You have that. Step number 2, step number 3, you get that car. Then, these collection people, they've already been going after you for 2 years. That's why it's not as high as the car thing, which is urgent and new. You save up $2,000 as quick as you can, which I think you can do in another 2 months with your no payments. Remember, you're buying the car in cash, so you have no payments on that other than car insurance. You have $2,000. You call collections. You say, hey, you've been after me for 2 years? Fine. All I have is $2,000 to my name. Let me write a check today. You remove
Let's go.
the collections.
All right.
And then, at least at that point, you owe.
So no, so not a lot of information about credit here, but at least you can learn. Don't get into debt. So she had a 400 credit score. Horrible, horrible. She had a payment that exceeded well above her means of what she takes home, and she has collections on a scale of credit between 1 to 10. She is like maybe a 4. No. 4, because 5 would be average. I would say she's definitely like a between 2 and a 3. If she doesn't sell the car, she has an opportunity to rebuild her credit using the car. It sucks that she has that interest rate or whatever interest rate she has. But if she can like reestablish that way, because she already has a car loan already on her credit, and that's at least something positive. It's better than not having anything, honestly, if you're trying to rebuild your credit. So yeah, so honestly, if it was me, I would definitely tell her. I would tell her to see if she can trade it in and get another vehicle, or at least sell it and then go to another dealership and that has the same financing company that she went through, or maybe a different one, and just get a lower car and just start building her credit. Yeah, that's what I would do. I would just sell the car altogether and then just get another car and just downgrade. And then she at least has something positive. Because that's the thing. When it comes to credit, you need to start rebuilding as fast as possible. So anybody that is willing to lend you for money, I would definitely take it, but definitely look at it from a financial perspective also. Is if you lose your job, will you still be able to pay this? Which is also very important. Do you want to pay the interest for as long as you want to do? Because also it'll tell you there before you sign the loan documents, they'll hand you a document that shows down, breakdown of your payments, your interest rate, how much you're paying on a monthly basis, how much are you financing, how much interest you're gonna get charged in dollar figures. So yeah, so it's like you do have that opportunity to look at it before. So yes, so please definitely do that. If you're definitely in a bad credit position, again, I'm an underwriter. I know what it takes to get approved for a loan, and I can help you. So definitely reach out to me. But yeah, that is that was a rough one, guys. All right, let's see. All right, let's go ahead and hop into this other video. All right, we got a little commercial going on. Let me see what else. Would I tell her if? Never mind. All right, let's see here. Get a critic. I think it's gonna be the one I'm looking for. All right, let's hop back. Let's hop into this next video here.
So if you're under the age of 25 and you want to be rich someday, here is exactly what you should be doing. Get yourself a credit card when you turn 18. This is a good one.
Wait a minute. Wait a minute. First step to becoming wealthy is go get a credit card?
Let's see where it goes.
Baby.
Hold on, let's see where it goes.
If you pay off the credit card on time, it's going to help you build your credit score, which you need to buy a house or take out any loans. Next, read these books. They will change your mindset and help you pay off the credit card on time. It's going to help you build your credit score, which you need to buy a house or take out any loans.
Ooh, okay. Well,
Next, read these books. They will change your mindset and help you build your wealth.
I see
Also,
some I like
start
here.
investing $250 every single month
I'm
in an
actually-
index
I'm
fund
digging it
like
a little bit.
Blue. This will be over $1 million when you retire. I also
$200 a
post
month.
more
Nailed it.
tips on my YouTube channel.
Oh, I love it.
my video. Go first. I'm gonna do the first reaction to this because again, it's my video. We're not in your video no more. So essentially, from the credit aspect. So she said pay off your credit card each month to then it can help you to get a car, not car, to help you buy a house. She's kind of right. Don't want to say she's completely wrong. So it's like it's good basic found information for her to say because again that builds payment history for you to be able to make those payments on your loan, which for FICO that counts for 35% of your credit score is your payment history. And then for Vantage, which covers TransUnion and Equifax, that counts for 41% of your credit score. So that's definitely good advice there. But the thing is that you need, depending on the lenders, you need more than just a credit card to be able to approve for traditional mortgage financing. I think off the top of my head is between like having 2 to 3 years, 2 to 3 accounts on your credit for it to be considered stable credit essentially. Yeah, I was like, no, that's definitely right because when I was underwriting for a bank, anybody that didn't have like 2 accounts were considered limited credit, so they were more risky. So yeah, so you need to at least have 2 to 3 accounts reporting at least for you can get away with a year, but 2 is the best because again, when we're underwriting your loan application, we're able to see 2 years. So if we see a year, we still know you're new, but then when you have 2 years, that shows that definitely shows stability as opposed to 1 year. So obviously the more the better type of advice is what this is. So that's really what I didn't like about a comment she said is that you just need a credit card and you can just buy a house. No, that is wrong. There's more to getting a house. Outside of the credit, you need to also have the income. You need a qualified debt to income and then housing ratio, which is pretty much housing ratio is pretty much the income is they look to see how much can you handle. So let's say if you were living in your mom living with your parents, not mom, but with your parents, and then you never paid rent, but now you're going to a $1,500 payments. That can be very risky to put someone hasn't been used to paying a mortgage or rent for them to now start paying 1,500. So that's something that gets included. Then you have your down payment and your closing costs, and if you need any reserves, which reserves are pretty much like a daily rate a rainy day fund. Depending on the lender, you may need to have like a rainy day fund of like one, two, three. I know when you have multiple, when you're trying to get a like a 4 unit house, or like three or duplex, triplex, or quadplex. Yeah, we should call it that. They want you to have more than 1 month of savings in your bank account. So, information was a little shaky, but it's not bad for what it is. But for more in-depth information, follow what I said. So, let's go ahead and continue. Let's see what they say.
Hey, Sarah,
you know what?
that was all great. I think that was wonderful. I don't disagree with anything she said.
Yeah, I mean, I probably would have said I wouldn't have started with credit cards. I mean, that's because credit cards are something you need to be scared of. It's not something that I think the typical person says, "What got me to $1 million?" But I understand the point she was making was you need to establish credit.
Understand how to use debt.
Yep.
But remember, pay it off monthly. But I do love the fact she basically recommended index fund, saving for the
systematic.
future, because she respected discipline. She respected.
All right, let's see if there was anything more. I think there was. Let me see. Nope, there was nothing more. Let's move on to this. Let's move on to the next video.
Google Fi, a phone plan.
Ooh, hello, commercials. Sorry, guys. Sorry. Let's see. All right, let's see what's on this one. Cash is trash. House hacking. No. Credit score. Let's see this one.
What?
Running back.
What?
One more time. Maxes out credit card, but pays it every month. Credit score drops, yes, because of credit utilization. Wait, what? Why?
What?
Don't use too much. Stay under 10% of limit. Now
Vibing with credit score growing. You know, all this reading, you guys need to understand. I'm good at math.
All right, me first. Again, my video. So that's really good advice. Definitely not the worst that I've heard. So yeah, so if you're definitely trying to optimize for your credit score to increase, definitely staying under 10% is going to maximize your utilization when it comes to your credit. So definitely good advice. Let's see here. Let's see what they're gonna say.
You know, let's watch it. Hey, let's rewind.
This is not supposed to happen. Where I'm zoned in.
I will
zoned in.
Maxes out credit card, credit score drops. Wait, why? Don't use too much. Stay under 10% of limit. Now vibing with credit score growing.
I see you, boy.
See, okay. So he maxed out his credit card, hurt his credit score. Well, then he learned that I should utilize less of it, and his credit score went up. That's true. That is one of the 5 things that goes into your credit score is your credit utilization. Don't max out your credit cards. It will hurt your credit score, and then you too can be vibing with your credit score. You got that?
I figured I was just offering the visual side while you were giving the education. That seems like that's how that video worked.
Way from now on. All right, perfect.
What school doesn't teach you.
Okay, education. Yeah, let's see. Morning routine. I don't think there was anything. Yeah. All right, let's move on to the next one here.
Your 401k could
Here. I think it was this one right here.
Incredibly simple. It's not a hard concept. You defer money into investments over the long term, and it ends up making you a lot of money. That's the way it happens. If something is like a get rich quick or easy, the magic secret. So
do not pay off your student loans debt, and here's why. Why give all that money back to the government when you can hold on to that money, invest in real estate or some other asset that can double, triple your money? For example, take that 40 to 50 G's that you have and go buy a fixer-upper like this.
Moan.
Then after you fix it up, you go to the bank and do what's called cash out refi. So you can pull the 40 to 50 G's that you have invested in the property back out and go do it again. So you basically turn that 40 to 50 G's into a couple hundred K, and you never lost the 40 to 50 G's, and you have the asset that pays you every single month.
When they do in the movie Up, when they have the dog that gets distracted by the squirrel, that was me. It's based on me. Disney actually still has to pay me a license.
You get royalties for that.
Off of that, because I mean, the first thing I thought it was a cat or something, but it was an X that shot across the screen. The only thing that gets me on that type of stuff is that if you're going to do fixer-upper real estate, why'd you go to college and get student loan debt?
Yeah, there's glimmers of truth in what he talked about how, levered money is valuable, right? If you want to do real estate or stuff. But you got to be pretty deep, because it doesn't always work out quite as easy as he said. Oh, I just go buy a fixer-upper and I got to fix it up, which takes capital, takes money to fix it up. And then once it does that, I'm assuming real estate values are really good, so I can do a cash out refi, which means I make my debt even larger. And then I get a really good tenant that's just going to pay me and I don't have to worry about anything. Well, what about when that tenant goes a few months and doesn't pay you?
Give me rent.
Or what about when you're fixing it up, there's some other cost that comes in. You're going to do the floors and there's some plumbing issues. Or what happens when at 2 o'clock in the morning someone calls you and something went wrong with the house? I get nervous when people want to pitch doing rental real estate is like this passive activity. This thing, it's so easy, follow these 3 steps and even you too can be a real estate investor. I don't know that I would concede it truly is a passive endeavor, nor an endeavor someone should do at the very beginning of their financial journey.
Hey guys, so here's something to...
All right, let's see here. All right. All right, so let's attack it from the credit side. So continue paying your debts. Again, there wasn't a lot of context of what he said to don't pay the student debt and your other debts. Yeah, to continue paying them because again, your credit score will drop and then it'll be really hard for you to get a mortgage. So there's that. So he brought up a lot of great points, which obviously you saw it, you heard it, but also something else that he didn't bring up, he also forgot about closing costs. What about closing costs on the loan? Like you need more than 40,000 to just be able to do that. So if you're not really if you're new to that, just know that is something that is a part of it. And then when you go for the refinance process, who knows if you're going to be able to qualify too? Because I don't know, why he's just saying that just to say it. Because again, you have to be able to qualify for a cash out refinance, or if you do a home equity loan, which is pretty much using your home as a line of credit, up to up to the certain value of the house, you have to qualify for that payment. So if you can't qualify, then you put 40 to 50,000 into a house, and then you can't really get the house until you sell it, type of thing. So it's really weird. And like they said, if you know a lot about flipping houses, then yeah, that makes sense. And it can work out, but then it also can work out. But yeah, from a credit perspective, you may not even qualify because either your debt to income may be high, you don't have assets. Because when you have more than one house, depending on the backed mortgage institution, they require for you to have reserves, which again are a rainy day fund, in your account in order to qualify to take the money out. So there's a lot of aspects that go into it. So you have to do that. You have to qualify from an income perspective. You have to have obviously great credit. You have to have you have to have the closing costs when you go to refinance. So it's there's a lot more that he's not saying, that is just not really it's not a quick 1, 2, 3, bam, you cash out, refinance, and you can move on to the next property. You have to qualify. So yeah, that's wow, interesting. I think that was the last one of that one. And all right, let's hop into this video right here. All right, yeah. Again, if you've been liking the video, go ahead and subscribe, ring notification, so you can go ahead and get some more. And also have a lot more videos here, in my channel that you can go ahead and look. All right, let's hop into this other video. Right.
At Max Sebasti asks, how much debt is too much debt? That is a great question, and there is a metric for this. This is called the debt to income ratio. Once you hit 43%, that is a red flag. That is one of the best ways to protect your and there is a metric for this. This is how much debt is too much debt. That is a great question, and there is a metric for this. This is called the debt to income ratio. Once you hit 43%, that is a red flag. If you are bringing in $10,000 per month and $4,500 of that is going to debt payments, then that is far too much, because that is going to leave you at 45% on your debt to income ratio. When you do that and you are applying for a loan, then they are going to look at this debt to income ratio, because they want to make sure they're going to get their money back for their loan. So they do pay a lot of attention to that debt to income ratio. You hit above 43%, that's going to raise a red flag. Honestly, when you look at 36%, they're also going to raise an eyebrow at that as well. At Keep More Money.
Let's go ahead and stop. All right, so let's unload what he said. Definitely great basic foundation information. I definitely don't think it's bad information. Let's just go into depth a little bit more about that. So, your debt to income. So the debt to income that he's referring to, the 36% and the 43%, that is mostly through a mortgage, is what you will see. So normally once you start hitting 36, 8, we start being a little bit more aware. And then once you are within that 43%, once you're in that 43%, then it's kind of like a cap for your debt to income, which again, in the previous video I reacted to figure out what is debt to income. Pretty much is it's a percentage that we figure out to see how much of your money is going towards your debt. So how you accomplish this is by adding up all your debts that are reported on your credit report, not what you pay on a monthly expenses. So not your groceries or your gas or your utilities. That doesn't get included in there. So it's credit cards, student loans, your mortgage payments. If you're paying for your taxes and insurance, obviously that'll be if that's including your mortgage payment, obviously that'll be in there. So it's those type of things is what you want to add up. So let's say if you have $1,000 of debt that you pay a month, but then you bring in $2,000, where we know that half of, if we do 1,000 divided by 2,000, we'll come up with 0.50, which is pretty much 50%. Because again, half of 2,000 is 1,000. So definitely kept it a little easy for you. So you guys can understand. So that's pretty much what debt to income was. So the reason why more getting into depth about it is when I worked for banks and I was approving auto loans, boats, motorcycles, like we could go up to 50% on those types of loans, and sometimes even up to 55% if they had like a 700 credit score on when I worked and was underwriting for a bank. So it's like, but I do definitely like that. It's good metric to have, because again, that's the more money you can keep. But yeah, that's a little bit more in depth about the debt to income and how different institutions have used different metrics for debt to income. Some are higher, some are lower, depending on the type of loan product. So yeah, that's some information there for ya. All right, let's get back into this video.
At I'm Adult-ish asked, seriously, who is trusting me with a credit card, and how on earth is my credit score calculated? I don't know who's trusting you with a credit card. However, I can tell you how your credit score is calculated. So there are 5 main factors. 35% of it is based on your payment history. Are you paying that credit card on time? 30% of it is going to be your credit utilization. This is the amount of the credit limit that you are using. Generally, you want to stay below 20 to 30%. 15% is credit length. How long have you held this particular credit line or credit card open? This is why if you have had a credit card for several years and you close one, that's going to bring down the average credit length. 10% is new credit. So this is when you apply for a new credit card. You want to be very careful. Your score does tend to dip during those times. And then the last one is credit mix. This is the mix between credit credit cards, mortgages, student loans, and other things. They want to make sure that you can pay different types of debt and you have a diversified credit portfolio.
All right, let's go a little bit.
To make sure that you can pay different types of debt and you have a diversified.
All right, so love the information that again he gave. Very good basic foundation. Just going again more into depth of what he's talking about. So when he's referring to this, the main factors, this is what FICO. So this is what Experian uses in order to give you your credit score. And again, you have TransUnion, which uses a different credit score metric in order to give your credit score. So I would like for him to be able to differentiate and give explanation of both. Because again, if someone just it's not bad advice just to take this just face value off what he says. But if you see why there's such a difference in your credit score, it's because of that. Is because they use different things to evaluate, your number to go ahead and give you a credit score. Watch, I'll go ahead and show you. All right. So right here, just like he said, FICO, this is from Experian, 35% payment history, amounts owed, blah, 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 blah. You see this. So this is what it takes. This is what will make up your credit score from the information that they have provided. And then for TransUnion and Equifax, there's this one. It recently went from Vantage 3.0 to 4.0. So you can see, so payment history now, instead of it being 40% of your credit, now it's 41. So it went up 41%. Ooh. That's all. I'll say it's something. All right, for your age and mix of credit. So it looks like they went ahead and credit history, and then your mix of credit went ahead and combined it together. So it was 21. They lowered that. Road, and then credit utilization. They have for credit utilization they have this. Then it was 20%. That stayed the same. So again, that's how much of your credit card balance versus how much you have left of those credit card limits. That's essentially what that is. Your new credit. So this is also new loans you applied. Look at this, a nice little bump. That's pretty good. 11%. I like that. And then balances went from counting 11% to now 6%. That's horrible. Then your available credit doesn't count as much. So, oh no, it looks like available credit That's very interesting, but that went from 3% to 2%. Definitely gonna find out some more information about that. So you see, so I wish you would have went over that a little bit more, because again, then you understand what affects. But off a foundation, this is not bad information. I would definitely write it. Definitely let's give him some snaps, baby, because he played good. He definitely did good. So yeah, all right. Well, let's go ahead and move on to the article, which I think it's a video. Let's touch up on this. So, this is going over the Equifax and the data breach, and how they came into a settlement for it. So, let's listen to this.
Toward consumers that have been impacted.
Sure. The focus of the whole settlement was around consumers. And, as you know, the cyber attack on Equifax in September of 2017 was significant on the company and on U.S. consumers. And if you look at the $700 million settlement that was announced today, the bulk of that will go towards consumers. There's a $380 million fund, of which $300 million will go directly to consumers for credit bureau monitoring, identity restoration, or if there's evidence of identity theft, for reimbursement for that. And then there's also the payments to the FTC, the CFPB, the state attorney generals, and the New York State Department of Banking. This comprehensive settlement was a priority of ours and is quite unprecedented to bring so many groups together. And the second priority of ours and the regulators was a single consumer fund. And it was really a focus on, doing the right thing for consumers. And just one last point that we've tried to be clear about, there's no evidence to date that any of the data that was stolen in September of 17 has either been sold on the dark web or any increases in identity theft to date.
So where is
So I feel pretty sure he is the CEO. CEO of Flats. So let me see. The new CEO talks. Oh, so he's the new CEO. All right. Unacceptable. I can't believe this is really what we came up to. So let me see. I was reading over here. So let's see. So uh let me see. I don't think you can see. Let me zoom in because I am frustrated right now. Let's zoom in. Let's see if we can zoom in. And I think we're right there. All right. All right. So it says, okay. Um So the deal, which is still subject to 6 month court approval process, will establish a consumer restitution fund up to $425,000 million, which will pay for credit monitoring for all from all three bureaus and any out-of-pocket loss related to the breach. As an alternative, consumers can request 125 cash payment if they've already signed up for the credit monitoring service that will continue for at least 6 months. Consumers may be eligible for a payment of up to 20,000 for the time they spent remedying fraud or misuse of personal information. Like that's BS. Like this new YouTube policy, I just want to curse so bad. This is unacceptable. Like only because the information hasn't been used, that means that you guys let this happen, and it's like it's supposed to be trusted. So it's like I I personally want like $10 million. Like it's ridiculous for them to let this happen, and they're not really paying the people that were really impacted the most. They're paying the attorney generals and the FTC, which for yes, the hours were accumulated to be used, but the thing is that they're not the ones that were affected because we already fund the FTC and we fund the Attorney General. They get paid with taxpayer money, so they're getting paid anyway. And for them to sit here and say that we get nothing out of it, and I'm more heated because I was affected by that, and I was pretty mad. I was like, I'm not gonna look to see if there's anything that I can do, but I'm definitely frustrated that us for the people that were affected were not compensated a lot more better for it. Honestly, I'm gonna put this on TikTok. Let's let this go wildfire and see if we can get something to happen because this is just ridiculous. I can't believe that there's really not a lot of money that's coming towards us for the breach because I was like the breach still happened. That's the thing. It's like it happened. So let's listen to what else this guy has to say.
What is it? What do we know about it?
That's a great question. We're working with the regulators, and I know the FBI and Department of Justice are working actively to try to figure out who the criminals are that committed this act against not only Equifax, but most importantly against U.S. consumers. And we'd like to bring that to resolution. But today's announcement really puts that consumer fund in place that will really give consumers some peace of mind that their identity is going to be watched with the credit monitoring that will be offered in the other services.
There's been some criticism, Mark, that the consumer funds may not be fully drawn down, that it's actually quite tricky for consumers to go through all of the hoops to claim the money that they may be due. Of the $300 million figure you mentioned, how much of that do you expect to pay out to consumers in, say, the rest of this calendar year?
Yeah, we haven't nailed down the timing of when the fund will be actually established. It could be as soon as the end of the year. As you know, that goes through a court process, and we're eager to fund it. But the whole $300 million will be paid. It's actually $380 million, including the legal fees. $300 million in the consumer fund will be paid by Equifax in its entirety to the claims administrator, and then the claims administrator, which is a third party, will go out and communicate with the consumers that were impacted and offer all the services that come with that $300 million fund.
I mean, you've heard the criticism. You've gone through the hearings yourself, already hearing from Senator Ed Markey, for instance, saying for years Equifax compiled dossiers on American consumers on a massive scale, played fast and loose with the data. The settlement is far from adequate solution. What else are you doing, Mark, to assure consumers that their data is safe with you beyond the fine and paying off some of the claims?
That's a great question, Sarah. When I joined as CEO last April, there was a couple of priorities that I had for the company. First and foremost is to put consumers first. We wanted to be, and we're planning to be, the most consumer-friendly credit reporting agency.
If you want to put consumers first, you should bare minimum be paying people 50,000 off top for the breach within itself, and then additional. So you're not putting us first. You pretty much got caught slipping, or you got caught, and then now you get hit with all these lawsuits because again, you weren't going to reimburse these people. Oh, when has the credit bureau really done anything for us without us having to ask for them? So it's like I don't believe them. Like, this is ridiculous. Like, I can't believe that. Wow.
In the United States. Second is really to have industry-leading data, security, and technology. And we committed to an incremental $1.25 billion multi-year investment inside of Equifax to really take our technology and our data security to industry-leading capabilities. And that incremental $1.25 billion is a sizable amount for Equifax and is about a 50% increase in what we would spend in security and technology historically. So we're committed to putting consumers first and security and technology because we know the sensitive data that we're entrusted with is data that we need to protect.
Mark, how confident are you that it's Equifax, the regulators, and some of your competitors won't face this sort of thing again? How confident can you ever be that this won't happen again?
Well, it's a great question. And from my perspective, after living through this for the last 18 months and the team living through it for almost 2 years, cyber attacks is probably the greatest threat not only American companies face, but companies around the globe as well as governments. Companies are attacked every day, and you and I see announcements every week of cyber attacks. It's a war that, from our perspective, isn't going to end. And an attack on a company like Equifax is an attack on U.S. consumers and attack on Americans. Now, what can we do about it is really the investments we're making in security and technology. We brought in a whole new security team, a whole new technology team, and we're buying and investing and installing the very best processes, technologies, and protocols out there to ensure that we're the safest out there. That said, we get attacked every day, and we're preventing those attacks, but they're going to continue, and it's really a war that's being attacked on every American company.
What can you tell us, Mark, about consumer behavior and how it's changed after this very well publicized, very broad attack? Have more Americans frozen their credit reports? Have they switched out? I don't know if they even can switch out of your system. And what's actually the impact from a consumer standpoint on your business?
Sure. As you may know, last September, the Senate and House passed a bill called Senate Bill 2155 that allowed a free freeze on your credit file. And many Americans have taken advantage of that with all three credit bureaus. Equifax, following the data security breach earlier last year, launched a mobile application called Lock and Alert that's available for free for life, just like the freeze from Senate Bill 2155. Our Lock and Alert product allows consumers to lock their credit file with their phone or their iPad and then open it when they plan to use it. So there's more tools out there for consumers to take advantage of it. That said, we play an integral role, and I think you know that, in the consumer economy. Whether it's a mom and dad who are trying to help rent an apartment for their son or daughter and co-sign on it next week, or someone buying a refrigerator at an appliance store on credit. We facilitate all of those transactions, so we play an integral role, but giving consumers more control through the freeze that was passed by the government or our free Lock and Alert product is clearly something that we're supportive of.
You have it. Ridiculous. They're not really being held accountable. Okay, they pay for money. This is money that they have. This doesn't really hurt them. This doesn't hurt them. You got to hit them where they hurt. I don't know why none of them went to jail for this. People that are responsible didn't go to jail. It's, oh god. But again, see, let's band together and cause an uproar. Like, there needs to be more done than besides pay money. Because again, it's not like we're even getting a good chunk of that money. The people that were affected, they're going to pay for the people in government, which again, is so stupid because we're already funding that as is when we're paying our taxes. So it's annoying. So yeah, this is ridiculous. All right, let's get into this other video right here. All right. Consumer complaints about credit reporting agencies highlighted in CFBP report. This is interesting. Let's see this.
The thing that's different about a Verbo vacation home?
Commercials. Again. Right. Well, credit tip of the day while we wait for this. Credit tip of the day. Don't get off this video because the video just started. Let's go.
Gains yesterday. Nice little take a look at the futures if we can. We had a big day of gains yesterday. Nice little, maybe a little bit of a Santa rebound, but well, it's gone out the window this morning in the pre-market. The Dow, the S&P, and the Nasdaq. Nasdaq down again 1%. Let's bring in Luke Lloyd to join us now to talk about it all. It is the final trading day of the year, Luke, and as we start a new year, as we look to 2023, what are the biggest risks in your mind?
Yeah, so there's a difference between the biggest risk in 2023 and the most likely risks. I mean, the most likely risk in our eyes is a somewhat mild recession that's a little deeper than what the average consensus is right now. I mean, with 5% to 6% unemployment and consumers finally cutting back their spending habits, which impact earnings estimates and valuations in 2023, both of which, in our opinion, is still too high. I mean, the biggest risk of them all, which isn't likely to occur, but something we do have to pay attention to, is a credit crisis. I mean, if unemployment spikes to the high single digits, there will be consumers that default on their debt. That could snowball into companies that over leverage themselves to default on their debt too. So a lot of companies did over leverage themselves the past decade because of low cost capital, and some companies have never operated before in a recession. So here's a quick stat, Ashley. I mean, the Nasdaq has almost 3 times the debt to equity compared to the S&P 500. Many high growth tech companies are going to have a hard time in 2023.
Well, that's interesting you should bring that up. I think of all the 11 sectors in the S&P this year, only 2 are on the plus side, energy and utilities barely. In this kind of doom and gloom environment that we hear so often from analysts, what, as an investor, should you do? Do you run and hide, put your cash under the pillow?
I think you have to be patient until about middle of next year. I mean, there's going to be some pain next year. There's no getting around that. I mean, heck, the Federal Reserve is intentionally inflicting pain to cool demand on inflation. But I don't think a credit crisis, is likely to happen or any kind of horrific thing because the Federal Reserve and the federal government seem to always be there to backstop everything in today's world. If defaults started rising and unemployment goes higher than what's needed to combat inflation, all the Federal Reserve would do is lower rates, and all the government would do is play the same playbook they've been playing and print trillions of dollars to stimulate the economy. The government and Fed saving the day might seem like a good thing at the surface level, but long term, we need markets and the economy to stimulate themselves through the free market and innovation. But I just think right now you got to be patient. I mean, not a lot of things look attractive. You got to wait for stocks to fall into your lap. You can't go out there and chase stocks right now. Sell-off hasn't truly happened in our opinion.
Wow. Yeah. This is take this video as a wake-up call. Like, if you're in debt a lot, start paying off that debt, because in case because it's already started, the massive layoffs. The banking industry, the tech industry have been in layoffs. So you definitely want to start scaling down when it comes to your debt. So again, remember, DTI plays a big factor when it comes to your loan. So if you're definitely over leveraged, start paying it down so that you can have more, so you can go ahead and continue decreasing that debt to income, and then also not running into any credit problems like missing your payments, which again count for the highest part of your credit score. So yeah, this is take that video you just saw as a wake up call to start getting yourself out of debt. So yeah. So last thing I want to go ahead and do, which I was actually supposed to do for the last video, is we need to go ahead and get into an habits that a person with a 800 credit score does. So be really happy with me. I had to do a lot of searching to find this. I was able to find a credit report, and it's actually a credit report that us underwriters use. It's one variation of it. Um, I've used this one in the past at other institutions. So yeah, let's get into it so you guys can see what we see when we're looking at your credit and you apply for a loan. Let's see. Da, 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 da. Just getting everything set up. All right. So this is what we see. Let me see. I think I'm gonna have to zoom in. Da, 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 da. All right. All right. So this is so it's just one person. How you can tell is that you only see one set of credit scores. So that's how you know it's just one person's application. So through Experian, they have 791, TransUnion 800 in one, and then Equifax 797. So we're definitely really high up there. So and then potential improvements. So if they do certain improvements, they can increase by these numbers pretty much. All right, so let's take a look here and see. Okay, so you're seeing a lot of information. Some of it looks information. Some looks familiar, some doesn't. So okay, so let's see the habits that this person took to get to an 800 credit score. So first, let's establish how long he's have credit because that's very important when you're building credit is how long. The longer you have it, the better your score will potentially end up being. So let's see. So we have the date open. So anything that's pretty much above this number is when it was opened. So this is open up 720, and this means so this is the month. This is the month, and this is the year. Draw, highlight. So this is the month, and this is the year. All right, so far this has been open since 2012. Bank of America 2007. All right, 2008, 2008, 2007 again. 2009, 2007, 2007. Let's see here. Let's see, 2007. 2007. Okay, yeah. So it looks like in 2007 is the information that we have. Let me see. So this is 2007. So it's going to the ones this one right here, this side right here is these are open accounts. So date opened was in 2020, but it's been reporting. So when we pull it, it always goes ahead and shows us the accounts that first are open. Um, so yeah, so this one's so I can establish that this was like towards the end of 2020. So seven, so he has about 13 years. He has to have about 13 years of credit history. So when we're looking at for credit, they always tell us that payment history is the biggest thing. Where we're gonna see that is going to be right here, months rev. That means month review. So this tells us how many times they've been past due 30 days, 60 days, 90 days, and above. So, all right, so let's take a look here. So this is 3 months in review. So far, not seeing anything. So far, really great payment history. Nothing there, nothing there. All right. Yeah, this person has not been missing payments. So you can see that now what everybody tells you this is true. Payment history does attribute to increasing your credit score and giving you and getting you up to the 800 so far. Yeah, like this guy has not missed a payment at all. Yeah. Wow. All right, let's take a look at this is a summary of it. So yeah, he's never been past due at all. Wow, look how easy that was. All right, so credit utilization amount owed is a big one through experience specifically. So right now, highest credits. So the highest credits means in combining all his line of credits that he has. So he has a total of $26,000 of available credit that he can use, and so far he is at 8,000. Uh, he's at $8,468, which he's about, let me see, he's definitely over 20% easy, even maybe even more over 30%. Let me see. For Yeah, he's at 32% credit utilization overall. So after, combining all his credit card balances and the credit limit that he has, he's at 32%. So he's not bad. He's a little bit over, but he's definitely in good shape. Which I can see why his credit scores, all of them are not at 800. But yeah, look at this. Staying under that 30% will go ahead and help you increase your credit. All right. So credit history. So we already went over the credit history, credit utilization, any missed payments. So let's take a look at this first one up here. So this is the mortgage. So I guess that's the other one. We'll see also credit mix, the type of loans that you have contribute. So this one right here, real estate loan. So you'll automatically already know this is a mortgage. So that's a mortgage right there. Toyota Motor Credit, auto loan, right here, Bank of America. And how do I know? Sorry, right here it says AUT auto and then MTG, which is short for mortgage, and then Rev is for revolving, which stands for credit cards. So as you can already see, he has a good mix of credit histories and different types of installments. We have more credit cards right here. Yeah, definitely has a lot of credit cards. He has this one with a 21,000 balance, or not 21,000 balance, 20,000 21,000 credit limit. Again, I'll do another video. Hit the likes and let me know in the comments if you want me to show you how to go ahead and build to get to a high credit limit. So, let's see. Is this an installment loan? This is closed. The last time I reported was in 2011. So yeah, I was like, he's had an installment loan, which again adds to more diversity on his loan. And again, Insta. That's how you know it's an installment loan. So wow. And then he's had another mortgage. So yeah, he's had another auto. So he's had a lot of good credit mix, which also has paid off because he's had a really high credit score. All right, let's go see how many inquiries this person has. Oh, look, even over here, no collections, no charge-offs, no bankruptcies, no public records, um, inquiries, zero. Wow. So, you know how they also say try not to have a lot of inquiries, that will go ahead and it can hurt you, but not enough to that it will damage you. I think it's a really great way to put it. So yeah, it's like inquiries. So we went over payment histories, also credit mix, went over how amounts owed in the and the credit utilization inquiries, and then new credit. So new credit. Let's see the loans that are new. So he opened this one up in July of 2020. He's only been paying it for 3 months. So see, that's not bad. Paying it. It's a mortgage. Here's another mortgage he's had for 2 years. Let's see something. Ah, this one's new. So this is a new credit card he got for $6,300. How you do that, boy? I can show you how to do that. Contact me and I can show you how to do it. So it's a small little balance here of 182 and 20, and then he has $28 of a monthly payment. He's had this open for a year. So this is relatively, getting out of that period that it's not a new account. Once you start going over 12, it starts now becoming not a recent new account. So yeah, so this guy, so there you have it. So here's pretty much in order to get a high credit score through Experian, what it takes. So you see, we had the payment history, we had the credit mix, we had really low credit utilization and amounts that he owes, and really excellent credit history. This person, I can give this person an auto loan tomorrow for a high amount because this guy's so reliable. and has such great credit, or at least based off the credit. I don't know about the money wise. I don't know how much he's doing there. So yeah, so like this is it. It's like definitely let me know in the comments what you thought about this. See if you want me to do some more. Um, 'Cause I was able to find some more credit reports, but yeah, like if you want to build your credit to a 800, this is just one example. There's not just one way of how to do it. There is more than a couple ways to get to an 800 credit score, and I just showed you one of them. So definitely, again, make sure you have no missing payments like he has, great credit history, low utilization, not a lot of inquiries. Also, we didn't see that he had a lot of that. If you get brand new credit, having really good payments and not missing on those payments, and he's had credit for over what's 2007. We said that this was 2020. He's had excellent credit for over 10 years, so that definitely helps. So yeah, again, if you guys like the video, like, subscribe. See you guys on the next one. And then there'll go ahead and be a video here, and then you can subscribe down there. See you guys.